Good day everyone, I'm Soo Zhi Xin, metric number is 201-767. Today I would like to share with you all about the study of relationship between liquidity risk of internal and external factors in housing industry Sdn Bhd. So now we are in introduction. Housing Industry Berhad is a company that operating in Malaysia. Housing Biscuit Factory was established in 1958 and has a brand guarantee for 60 years. Cat Ping Pong crackers is one of the products sold in cities and towns across the country, and it is also a household name that has won the love of all races. Except for Cat Ping Pong crackers, they also produce housing cream crackers, natural, and etc. Besides the crackers, they also produce the beverage such as instant tea, 3-in-1 instant coffee mix, nutrition instant cereal, and others. Now we are in issues and problems. The biggest challenge that faced by housing industries in Sdn Bhd, which is facing rising raw material prices. On the other hand, the highly competitive domestic market is also another challenge for HSIB. Besides that, after-tax profit was fell slightly by 3.3% to 41.5 million ringgit from 42.9 million ringgit in the previous year. This is mainly due to the decline in profit margin in certain sectors, and the economy slowed to 3.6% in the fourth quarter of 2019 due to the decline of the production of palm oil, crude oil, and natural gas, and the decline in export during the Sino-US trade war, and contracted to 4.3% this year, up to 4.7% in 2018. For the research objective, the first one is investigate the internal factor that affect housing industry Berhad liquidity risk. Second one is investigate the external factors, and the third one is investigate the internal and external factors that affect housing industry Berhad liquidity risk. For the research question, the first one is that a relationship between internal factor and the liquidity risk of housing industry Berhad? Actually, the second one and the third one is quite similar, just that change the internal factor to external factor and internal and external factor. The dependent on this study is return on asset, and the internal independent variable is return on equity, which is ROE, current ratio, quick ratio, average correction period, debt to income, operational ratio, operating margin. For the external independent variable is GDP, inflation rate, exchange rate, interest rate, unemployment, and CG index. So next is methodology. The sample that selected is housing industry Berhad, and we will find the annual report from Bursa Malaysia from 2015 to 2019. To identify the ratio, we will use the Excel and also use the SPSS to find the variable. So for SPSS, we will find it for model summary, ANOVA, descriptive statistic, correlation, and coefficient. So now is descriptive statistic. We'll use mean, which is the average of each variable, standard deviation, which is the square root of variance, measure the spread of observation, and which is the amount of the data that used. So this is the table of descriptive statistic of internal and external factor. So now is correlation. What is correlation? It is a mutual relationship or connection between two or more things. So in this study, which means that statistical measurement of relationship between two variables. They are positive correlation and negative correlation. Positive correlation means that one variable increase and another one will increase also. However, for the negative correlation, one variable increase and another one will decrease. So this is correlation between the internal and external factor. So you can see from here, the most significant is operational ratio, operating margin, ROE, exchange rate, and CG index. So this is correlation between the internal and external factor. So you can see from here, the most significant is operational ratio, operating margin, ROE, exchange rate, and CG index. So this one is ANOVA of external factor. So you can see from here, the significance is 0.422, which means that the p-value is more than 0.1. The independent variable for this external factor is exchange rate, interest rate, and GDP. So now this one is ANOVA of internal and external factor. You can see from here, the independent variable is interest rate, GDP, and debt to income. It is indicate the significant amount, which is p-value is 0.581, which means that is more than p-value equals to 0.1. This one is model summary of internal factor. You can see that R squared adjusted R squared is the same amount. The value of W Watson is 2.044. If the value of W Watson is between 2 to 4, a negative autocorrelation is shown. This model summary is for external factor. You can see from here, the R squared is 0.886, which means that variance of independent variable explained by 88.6% of the variance of the dependent variable being average. The W Watson is 1.877 and shows that autocorrelation is possible. So now we are comparing the adjusted R squared between internal factor, external factor, and also internal and external factor. The most powerful to explain the dependent variable is internal factor, because the adjusted R squared is 1, is same as 1. So this table shows that the model summary of internal and external factor. You can see from here the R squared is 0.775 and the value of W Watson is 2.135. It shows that it is between 2 to 4. So this one is a negative autocorrelation. So this table shows that the model summary of internal and external factor. You can see from here the R squared is 0.775 and the value of W Watson is 2.135. It shows that it is between 2 to 4. So this one is a negative autocorrelation. Next, we are talking about the coefficient of internal factor. We can see from this table, the largest important impact on liquidity ratio with a p-value less than 0.1 is quick ratio and average correction period. This table shows coefficient of external factor. So in this table, the largest important impact on liquidity ratio with a p-value less than 0.1 is GDP, interest rate, and exchange rate. In this table, the largest important impact of coefficient internal and external factor on liquidity ratio with p-value less than 0.1 are debt to income, GDP, and interest rate, which is p-value less than 0.1. In conclusion, for the internal factor, their operating margin, average correction period, and quick ratio will affect the liquidity ratio. And for the external factor, their exchange rates, interest rates, and GDP will affect the liquidity ratio. For the recommendation, in my opinion, the number of the financial years could be increased to more than 5 years. Besides that, the variable used is suggested to add on as well.